Hey guys, what's up? Hope everyone is well. I hope you can all hear me.
Come up and
I hope everyone is well. Welcome to Friday, end of the week. Markets have been forming very good structure. Nothing to complain about. The markets do what the markets do. We just follow what the market tells us. So I won't waste time. I'll just jump so that we don't waste time and just get straight into the analysis. And after that, we'll be done and we'll see you guys on Monday. So first of all, as Monday started, I was looking at GBP USD. It was my main pair of the week. Apart from that, I'm looking at USD CAD and also dollar. Those are actually my three main pairs. So I don't look at many other pairs. The other pairs are just analyzed like gold. Also make sure I look at dollar index to know if the market, the US dollar is gaining strength or losing strength, so that I can know which position to put myself in any pair that I'm trading. So starting off, any questions if you have, straight into the chat room, don't waste time. So let's look at the charts. Let's look, what do we have? What do we have? So I'll start with GU. Okay. GU. What are we looking at? So GU has sort of been in a good structure. So if we look at the main one, I'm looking at this. There was a channel that was being formed. So this was a channel that was broken. Market entered into sort of this pattern that we're seeing, another channel. So it's a normal channel breakout pattern that forms. I'm yet to do more statistical report to see how much this forms, but that's one of the market patterns we're looking at. So if you take a look, I've just taken it up here, and how I've done this is just plain simple. So it's something, if you're doing back testing, you can actually use. So the main thing you just do, you just take let's see. So it's sort of for testing. So just take the bar pattern. So there's this tool called the bars pattern. Taking here all this market, so it just duplicates the price action that has been forming till there. What I do then, I just bring it up just to test it out away from the market so that I don't get confused. So what I'm looking at, if I take it up here, if I take the channel that I'm looking at, so in future, note this pattern, will be looking at it a lot more times. So if you take this sort of channel, taking that top, looking at that breakout, taking the bottom, you can see that was a perfect channel. So we sort of got this breakout, and then we sort of entered into another channel. If I can take the channels, so another channel pattern over here, and that's what has been forming on GBP USD. So if you take a look at that, so perfect channel. So one thing we're looking at with this pattern, anything of two things can happen. Either we break out, get that pattern, we continue to the upside, or we continue back into the main channel that we have. Okay. So here you're not forcing anything to happen. We're just waiting to see how market pattern is going to show us. So this is a classical breakout retest pattern, and then we know the trend of the direction. We've been seeing a lot of dollar weakness. So the upside is more reliable than the downside. So we have been mainly looking for the bullish momentum to continue to the upside. So if you come back to our chart, this is exactly what we're seeing here. So beautiful pattern. Now we're just waiting for that confirmation of whether market will continue to the upside or back to the downside. I remember on Monday, if I go back here, so I remember at first we had sort of a ranging market. So I remember on Wednesday or around Tuesday we had a breakout. So if you take this, so this breakout over here around 1.3165, 3170. So I had a buy position and I was looking for market to go further up. But on Wednesday we got this strong drop in the evening after the Feds released their FOMC meeting minutes, which they're talking about. If you go and research, you can look Fed. This is on CNBC. So Fed's official expect that coronavirus will weigh heavily on the economy. So those news that came out, and they were talking about how the Feds are handling the coronavirus situation. So don't forget about that. And that's why we got this strong drop. But it was not, the main thing is that we're still following the chart pattern. So this was a pattern that was being respected. We got that beautiful drop to this level, and yesterday the market shot further up. So we're back to the levels we were late Wednesday before the market dropped. So that's what I'm looking at GBP USD. So as I've said, I'm waiting to see if market will break this to the upside, continue up, or correct to the downside. Aussie dollar, same thing. Same thing for our chart. you can see market is in this main channel formation, and up here we're forming. So this channel hasn't broken to the upside, it's forming inside the channel pattern itself, the main channel. So if you come down, there's this channel that is being formed over here. Market has been going up, down, up, down, up, down. Normal market structure. If you go to the 1 hour chart, we still have the pattern we're looking at, the expanding flat sort of. So we're still within this main 1 hour chart pattern that we're looking at. You can see this was a good wedge that formed when market was going up. I was expecting a touch of this upward trend line, but market didn't really touch it and then fell further down all the way to this level. You can see I have sort of this trend line that has been respected. This was yesterday. Market tapped it to the T and went about 50 pips to the upside. About 160 pips to the upside. I was aiming for 61.8, but market didn't reach there. Normal market structure, so we're sort of still dangling around there. So that's what I'm looking at on Aussie dollar. USD card, I'm looking for market to start going further up. So before I go that, let me look at dollar index. So dollar index, classic market breakout. So you can see this is what happened on Wednesday, just like GU. So we had that false breakout. This is what happened. So you can see that market structure that I have. So classic market was ranging between these levels. We had that breakout, we didn't get that much momentum. If I'm able to zoom so that you can see clearly. So you can see market broke out, didn't get momentum around this level, came back with a lot of momentum back into the ranging region. We saw yesterday market has come back down. We've retested that support region at 92.5. So we're seeing market moving further up. This is the 4-hour candlestick, which will be closing at 12 p.m. today. So you can see this market structure can continue pushing further up. With that said, I can see a lot of now on USD card, which is also a pattern that follows the dollar index. That's sort of directly correlated. So I'm seeing this market continuing also to the upside. You can see this channel is what we've been respecting. So according to my analysis, you won't find me with a lot of pivot points and like Ken and Tara. So I use a lot of market structure. That's how my strategy is formed. That's what I'm looking at, market structure. So we're seeing this counter trend line was broken. This one that I'm looking here, market has gone further up. We've broken it, and we've currently retested 78.6 on the hourly chart. So we see we had this breakout, retest, and sort of we got into this channel pattern. Sort of just this usually shows that the market is coming to an end at this level. So I'm just waiting for the 4-hour close to close fast so that I can know if this market has been respected. But I'll be looking for market to continue pushing to the upside, especially if that dollar index continues pumping to the upside. So with that said, that's what I'm looking at. GU, we're still waiting for this touch of this upper channel boundary to be touched. Okay, so don't rush into selling, but if you get this touch of this upper boundary, there can be that sell option. But if the market continues momentum to the upside, then be very careful on that. The market can continue going upside, but dollar index looking very clean to continue pushing a bit to the upside. So that's mainly what I have. Ken will come and cover the rest. That's what I'm looking at. So USD card is what I'm paying main attention to. It has a better risk reward ratio for me compared to the rest, especially if you continue to the upside. So I can enter that market, get my 50-60 pips for today because it's a Friday, and be out of the market as fast as I can. So make sure when you're trading, you take your profits. If you're cutting your losses, cut your losses very early. Do not be caught doing the wrong thing. Just remember, you'll always be wrong multiple times. So whenever you can get market and get your profits, just get it and get out, and don't rush into taking much more trades so that you can make a lot of money. So that's basically what I'm looking at on my pairs. My market structure, I've shown you the 3 pairs that I watch: Aussie dollar, USD card, and my main one, GBP USD. Okay, so with that said, I'll stop there. Ken will come and cover his analysis, show you what he has, and then we'll move on, because he does different pairs from me, such as gold, EJ, and other pairs that I don't personally trade that much. So that's it from me. I'll see you guys next week on Monday.
So hi guys, hope you're doing well. It's on Friday, the last day of the week, and Caleb has talked about several things in the market. So for me this week, how was the week? This was a tough week for me, so I was caught up in some of the bad moves that happened. So I was long on sterling, made some good money, never came out, and markets quickly reversed. So you can see the downfall was very, very fast. I think it took place in about 1.5 or 2 hours, and I was knocked out of my profits and ended up taking losses. I actually added into some positions up there, and that costed me a lot. I also had some gold long positions which I also never came out of, and markets went back. And most of these positions I never came out because they never met my target. So I don't think I really made any mistake. The mistake I made was not coming out when the markets were moving lower, and I think I'll try and learn from that and move on. So when you're trading, you should know that you'll be caught up on the other side of the market. And in this business, if you're caught on the other side of the market, what normally happens is you end up losing money, and you have to pay for your tuition fees, and you learn one or two things and you move on. And you obviously, if you trust in your judgment, if you trust your system and your style of trading, I know I'll make it back. It's only a matter of time, and I'm sure you guys will be here while you're watching us making it back. So I still have confidence in my system, still have confidence in my judgment. I'll still trade in the same way. I won't change much. Maybe I'll change one or two things, but not much that will change. Anyway, moving on into some of the things that I'll be looking at. So I'll jump into sharing the screen. I think for me, I think markets are currently in a stage where we don't know what will really happen. The dollar is struggling to break up below the 92.5 level, which is a strong level. So if you look at the current markets that we are trading, much of what we are trading is pegged on what will happen to the dollar. So if we get some dollar strength back, we expect sterling to sink a bit lower, we expect oil to sink a bit lower, we expect gold to sink a bit lower. If we don't get that dollar weakness and instead we get dollar strength, then you know what will happen in the market. So I think currently we are at a crucial level. So I'm not directional on the direction of the market. I'm actually out of the market. I don't have any positions. I'm trying to get a clear signal where the markets will head. Because if you look at a pair like sterling, we had that quick drop on Thursday. On Wednesday, then we had a quick comeback yesterday. And now currently markets are trading at the 1.3250. If you look at oil, let me just jump into oil and we can start our analysis with oil. So yeah, this is oil. I won't even go to the daily chart. Let me just look at the 1 hour chart, which is giving us a clear representation of what is happening. So if you look at this is madness. This is not what normally happens in the markets. If you have been trading markets and if you look at markets, such things will happen, but will happen often. There's nothing that will give you this identification that this would happen. If you were selling this market and then you had this quick comeback, you wouldn't blame yourself for having such things. These are things that will normally happen once or twice, and that's why we always emphasize you need to manage your risk. You need to ensure you survive trading such things, because these things will happen and sometimes they'll get you. Like for example, last year I was gotten in a gap open on a weekend, and the markets gapped against my position 800 points, and I lost a lot of money. So if you're trading, you need to have some shockwaves for absorbing such things, and to have the resilience to go on even after such things have happened in the market, and to enjoy the good times and also survive the bad times. But anyway, so what am I looking for in oil? For me, I'm not doing anything on this market currently, and I don't think there's much that will happen today that will change my bias or anything. Maybe we'll see breakouts, but I'm not planning to trade on or to anticipate where the breakout will take us. So for me now, I'm out. I'm waiting for this breakout. So we are sitting in this consolidation from the 41.2 to the 42.9, about 200 pips consolidating between these two levels, and you can see markets are not doing anything. So yeah, you may say you may try to sell here trying to anticipate this move, but clearly you can see if you sold yesterday, which I was tempted to do but I didn't sell, I would have been knocked out. Not even in just an hour I would have lost money, and I don't think there's much that I would do after such things. So the better option is for me to wait for markets to come down, and once they have the volatility is over and this madness is over, I can come back and try to capitalize on more solid moves or more rational things happening in the market, because these markets are traded by people, and sometimes people are irrational just like us we are, and when that happens markets will tend to behave in such ways. So that's my outlook on oil for now, sitting on cash doing nothing. Next I look at gold, which I think has some opportunities. So I'll jump into gold. And gold from the weekly chart. Let's start from the weekly chart. So last week we had the first trade candle on gold, which was formed at this point. So you can see we tried going above the 2000 level. We went as high as the 2050, but clearly we are rejecting the 2000 level. So when markets say that, you need to move on with market. So what am I looking for? Maybe we'll still get some downside to 1850 to 1750, who knows. But if you go down to the daily chart, then you can get a clear representation of what we are looking for. So on the daily chart, we had some bullish comeback in the early days of the week, but on Wednesday again you can see this big fall on gold. And I think if you're trading gold, you need to be cautious. You need to be very, very cautious with this pair. There's a lot of volatility. So I'd advise you to at least cut your normal position size by 2 or 3 to ensure that you don't make irrational decisions, because markets will move very, very fast. And then they move fast against you, you'll tend to make bad decisions, especially if you're trading big size. So what am I looking for? If this Fibonacci is to be respected, 61.8, you could see gold trade as low as the 1800 level. And if I go down to the 4-hour chart, we are just dangling below the P level for the week. Yeah, you can see we are below 1950. If we come back above 1950, then probably bulls still have it. But if we manage to maintain prices below 1950, I think we could still sink lower to 1875. On the 15 minutes, there is a day trade that you can actually capitalize on. So if you look at the markets for the last 2 days, we have been consolidating. So yeah, we've been consolidating between 1950 and 1925. So what am I looking for? I think I'm looking for a short to 1910 before the end of the day, 1900. So this is about 400 pips if you have the balls to execute this trade. Stops come in obviously at 1955, 1960. So position size with that in mind. So that's what I'm looking for in gold. I won't go through euro yen. I think has actually broken down just now. So I just came into the office some minutes before the markets opened, and markets are down. So if you look at euro yen, this was actually my setup for the week. But again, these things fail, and when they fail, you don't have to change your bias or how you look at markets. You just realize that you're on the other side of the market. So I was looking for a long position, but clearly you can see we never got enough bullish momentum to push us higher, and markets are now moving lower. So on the hourly chart, I have this channel which is giving me good structure about what is forming. So we are now moving from forming higher lows, higher highs, to forming lower highs and lower lows. So what do I think? I think markets are changing, and again you can see slightly, I think the dollar will get stronger for some time. So if I look at the Dow Jones, which is the last thing that I look at, which is it is more of a, this is an index actually, this is not a currency. So these are mainly stocks, 30 of the best American companies being traded. So yesterday we had, again on Wednesday we had that big pull to the downside. But yesterday we had this close suggesting that probably we'll get some bullish momentum. Ultimately, I'm looking for this market to start going down heavily from the 30,000 level. But clearly you can see markets are rejecting the 28,000 level. So on the 4-hour chart, not much is happening again. So I'm still sitting on the sidelines. I think the money will be made in the middle of these trends as they develop. And I think waiting is the best thing for you to do right now. So I'm out of the market, I'm preparing, I'm trying to look at what patterns are forming. But for now, I don't think I'll have I don't have any trade. Maybe I'll try and take on this gold trade, the day trade that I talked about. But that's it from me now. There's nothing else that I'm looking at. And we'll see you guys next time. So if Caleb has anything to say, I think I will stop there. And I will see you guys next time.
So yeah, so that's from Ken. So as we end the week, just something I'd like to remind you guys. There's sort of something we're doing where we are starting a program where we get different people one-on-ones who can come here. We just go through a few sessions and we can answer a few questions so that we can get to know where you're weak at trading, where you're strong at, and what people can work on. So as I said last week, if you want to be part of that program, it's something we're still planning, so it's still in the works. But if you want to be part of that program, you can always WhatsApp me or DM me so that we can book you in. Then very, very soon we'll be starting to meet you people where you can come here. We just go through different trading things. You can also see how we are trading here just for an hour or an hour and a half, at most 2 hours, and after that we are done. So that's all for us from this week. As we said, GBP USD is what also caught me on the bad side this week, so I lost money on that because also me, I didn't take profits, and it was about 80 pips up, and markets very, very fast dropped. and I lost money on that. So moving forward, next week we'll be learning from those mistakes. So those are the tuition fees you pay for learning in the forex market, but it's part of the journey. So that's all from us this week, and I'll be seeing you guys on Monday. So peace, have a good one.